this channel, doing the usual thing, our thing, and definitely what we love to do. So guys, welcome, karibu sana. We want to see what I did yesterday. Today is on Thursday, so we're going to review my Wednesday trades and also see what today got for us. So as you can see, I have some indicators there. So for now, let me remove them. Yeah, so that we have this clear chart over here. So you can see 3 trades there, with one as a low, a win. The first trade, this as a win. The second one as a loss, and this third one as a win if we go further till today. But as for yesterday, I could have closed it before. Okay, but you can see the market really rallied lower, so maybe I could have taken half to this point, because I would have liked to close my trades at around 12, so I could have taken my partials there and let maybe some part run. Yeah, but let's get cracking into this and see how did I how did I come to take this trade, what did I consider, and those all stuff. Because but yeah, something else you can see, today we are on Euro USD. I will be on Euro USD because of various reasons. I was on the futures, but because I couldn't access, the trading view, I have not yet subscribed because of Africa. But the amount of money for subscription, I'm still in school, I'm still struggling. So I just moved from futures to forex because I want to learn on how to take trades, relate with money. I can be putting these structures, but on I don't have the expertise or the experience to put in trades using money, or to put in trades that money, you can see money fluctuating there. So that's the experience I wanted. But because in futures you have to subscribe so that you can get that trading or paper trading for the futures. So I decided to move over here so that I can work with EURUSD and see what will what because I didn't manage to pay for that trading view on for futures. So yeah, it is yesterday, and let's go to the daily for yesterday. I guess you will filter out everything that is after Tuesday. So you can see here, this was on Tuesday. Yeah, we were going to talk on Wednesday. So this was a large candle on Tuesday, and from the here, what we can see, my bias is bullish still. I want to see price go higher and take this buy side liquidity, but yesterday wasn't clear, the bias wasn't that clear. So I dropped lower to the 4-hour chart, whereby Tuesday had closed here. That candle was Tuesday. So, and also this, so around 4 a.m. this candle had closed. Okay, so what I wanted to see, I used my first trade. I wanted to see price rally to the constant encroachment of this candle. So because I'd seen when the candle started, this next candle, I wanted to see it retrace to the constant encroachment. So that was my analogy. Then I dropped lower to the 1-hour chart. The candle had closed in around 4. So I guess, yeah, this is the 4 a.m. candle, because the 4-hour candle had started at around 1 here. traded lower until 4 when it closed. Okay, so I see this close. I saw this close. Then this other candle at 5 a.m. I saw it close. I was watching at the 15-hour chart. So we go behind. Yeah, I was watching the 15 chart at around 4. It closed. The 4 here, the 4 a.m. candle, because this when, remember, this when the 4-hour chart candle closed, you saw its liquidity was grabbed, the liquidity to the other side. Let's go back to the left. I'm meaning more fucking charts. Yeah, over here. So these liquidities, so below this 4 a.m, 4 a.m had closed. Yeah, 4 a.m, that's my my brother over there. Yeah, in your PS. Yeah, yeah, pad ziko hapo, hizo ni za PS. Sawa, unataka kuona kucheza? Unataka kuona kucheza? Muna watch? Sawa, keti huko. Yeah, so sorry for that, guys. I had to, you cannot assume children. So this is the low of that 4 a.m low. You can see it there. So let me mark it to the left side. So meaning there's liquidity that was below here to this side. Yeah, that's the low. So dropping to the 15 minutes chart, I haven't labeled it clear. So it closed here. Sorry, I should be placing it at the close. Motherfucker. Yeah, the candle closed here. Remember, at 4 a.m. At 4 a.m. the candle closed there. Then dropping down to the 15 minutes chart. This is the line. We extend it this way. Yeah, around 4 a.m. here, the liquidities were grabbed. Then dropping lower to the 15 minutes chart, I spotted these response higher, and I wanted, let me go back to the 4-hour and use a Fibonacci tool on how I utilized it to determine the constant encroachment. So I took my Fibonacci tool, placed it at the high of these. Remember, these other candle had not yet formed. I used it at the high, again at the low, and determined the 50 level. So here at the 15 minutes chart, we can check it out. Yeah, this red line is the 50 level, and the market was around this point. So here I spotted this candle closed above this high. Okay, and also these two down close candles had already formed, these and these. So I took these to be my order blocks. So I dropped lower to my 5 minutes chart, and dropping lower to my 5 minutes chart, what I spotted is there was this bullish candle, this bearish candle in this price leg. So I was watching to see what will price if this candle will be closed above it. So it closed above it. Remember, I want to see price retrace to the 50 level. Okay, so immediately it closed above here. I wanted to catch this retracement low into this order block. This order block was to prevent lower prices. So again, I dropped to the 3 minutes chart. Here I was watching price here, so I wanted to this as it was moving lower, this candle I entered as it tapped on that order block, the 3 minutes order block. It went into a little drawdown, then rallied up, and my target was above that above the 50 level. There is this fair value gap here, so that was my target, and you can see it was tapped in. It was tapped in, and the duration that it took for it to be tapped, because I entered here 1 2 3 4 5 6 7 8 9 10 12 13 14 15 16 17 18 18 by 5. So 90 minutes, that is 1 hour 30 minutes. Yeah, it took 1 hour 30 minutes to retrace to our TP, but it then rallied higher, and we had, by the way, news. Okay, so something else I had wanted to remember, our Asian highs were not yet taken out by London. Okay, so I was also anticipating generally I was lower prices. I was anticipating for low prices, but the Asian range had not yet been taken. So we had the PPI news yesterday, so you can see how the market dropped down. Okay, where did it drop to? So using our Fibonacci, let's see, because we cannot buy at the premium. Okay, we buy at a discount. So let's take our Fibonacci and see if this price reg retraced the bullish price reg. So it retraced to discount level, and the discount PDRE we can spot there is this order block, because we have no fair value gap. It retraced to this order block, then rallied higher above. At around 8:30 we had this news. It rallied higher, took the Asian highs, then rallied lower. As it was rallying lower, it cleared these. Let me make these charts clear over here. These lows were cleared. Again, I saw a retracement. So as I was watching this retracement, I placed my Fibonacci tool yeah, from this high, the news, the 8:30 high, to this low. So I noticed this 50% level. Okay, so price retraced higher. Okay, but it didn't tap into this 50 level. So I was watching price at the 3 minutes chart. So it didn't tap into the 50 level, because the Asian highs have been cleared over here. The Asian highs have been cleared over there by the news. So for yesterday I was bearish. Okay, so I wanted to see this retracement higher. Okay, so price dropped down, and around this point I saw this high over here. What was my analogy of entering into this trend? I saw this price action, and this candle closed above this 5 minute this 3 minutes down close candle here. As it was closing, I entered at the top of it. Okay, anticipating to see prices retrace to this to this premium 3 minutes fair value gap. But guess what? I was so wrong. Like, I didn't follow even my confluences. I had no confluences to enter, like my market structure shift. I don't know what happened. Maybe let's go back to the 1 minute chart and observe what happened there that made me take the trade. So here you can see there was this market structure shift. This is the trade, but you cannot see that I was watching, I saw this market structure shift, but this is the 1 minute. Like usually I say I will not follow my 1 minute chart because for various reasons. I'll follow my 5, but I didn't follow it. So number one mistake I made, I didn't follow my rules. Okay, so it was a bad trade because I never followed my rules. I didn't see a clear 5-minute market structure shift and also a clear 3-minute market structure shift. I didn't observe that and entered that trade. You can see the 5-minute had nothing to show that price was wanting to go higher. Then I took that close, price came lower, cleared that liquidity. You can see now we had that buy to our point of interest. And one mistake was I didn't wait for, because my general bias was because the Asian highs had been cleared, my general bias was bearish. But a mistake again I did, why would I enter this buy? Okay, so I could have taken 3 trades, which is not the plan. Mostly the plan is to take 2 trades per day. Okay, so yeah, it was something I shouldn't do. I took it, I noted it down in my journal, and I'll have to also bring forth some restriction measures or consequences to if I'm not following my rules. So you can see market rally lower, clear these lows. Okay, then we had these bull market reacting off. You can see if I was reading this price action live, you can see price rallied higher, created this down close candle, price again rallied higher. These I could have anticipated to see a candle close above. So this candle closed above and also closed above this inversion fair value gap around this point. Sorry guys, these fair value gap are not these inversion fair value gap around this point. Yeah, around this point. This candle had closed above it. You can see this high also, this candle had closed above it. It left a fair value gap there, but it was not tapped into. Price rallied, this came low. Sorry guy.
Yeah, Mr. B. Yeah, Mr. B. Yeah, Mr. B.
Okay, so sorry guys, sorry shortly. Mr. Bean. Yeah, I'm done. It was a baby, I have to comply to his orders. So we had these candle create a fair value gap, as I was saying. Sorry for this distraction, by the way. This candle never tapped into it. We had this order block, so we could have missed a trade here, but we have to follow our rules, 2 trades per day. So wanted to see the reaction of, because we are bearish, the reaction of this level. So the market traced higher, tapped us into what to enter, and we had this reaction, a good reaction of this 3 minutes fair value gap. If we extend it this way, then price run lower. You can see this gap was left as a breakaway gap. This fair value gap tapped into, then the market rallied lower, price retraced into this fair value gap here. This other fair value gap is left open, then price rallied lower. But this trade I could have closed it earlier, because at around 12. I could have everything should be done. Yeah, so if I was to be into, I was not watching this price action. I had anticipated this before. Yeah, so after I saw these lows, it was okay. So I left the charts. By the I left the charts. Once I saw these candles print around in the 1 minute chart, I left, went for a walk so that I might not be impulsive or anything like that. So you can see how price decreased lower, and until it was hit, TP was hit around today. No, around 9:35 the TP was hit. I was also watching this 4-hour fair value gap constant encroachment. Let me show you what my targets were, and they were hit. Then price, you can see price is retracing. So this fair value gap over here, these candles low, high, and these candles low, that was the constant encroachment. So I was targeting it, and you can see the candles have closed above the constant encroachment. So that was my target, and it was tapped into. And now for today, I want us to have a clear look and anticipate what we should be expecting today. So let me clear. I guess we have analyzed everything. Yeah, I've analyzed everything, so it's time we can delete everything here. By the this SMT is the in the GU had not yet cleared the Asia this range. It made a lower low. This SMT GU made a lower low. It didn't take out this high. Okay, so we call this an SMT, whereas EU took out the high. Let's see. GU. It is this candle, you can see it, 8:30 candle. The high never took these 2 a.m. Highs. They were never, the 2 a.m. high was not taken by the 8:30. Also the Asian range here, let's see, from 8:12. And this is the range with the highs there. We can see the Asian range wasn't cleared, it's still intact. So but for EU had cleared it, so it's worthwhile for study. And remember, we're talking about the 2 a.m. candle here had been cleared. The high here was cleared by this, so that's we call SMT, and the Asian range was taken. So yeah, now we can delete these because we've talked about it, and check on what we can be expecting for today. For today, what we can expect, or what we should be anticipating from the daily chart. we can see we are bullish. Okay, we are bullish. I want to see our price retrace higher to they go clear these buy side liquidity there, yeah, and maybe retrace into that 3-week as a week inversion fair value gap. You can see the buy side liquidity there, and you can see these weekly fair value gap there. So, and price here is balanced, so we have no inefficiency here. So going higher, we want to see a retracement higher. Sorry, check on these, putting my low there to determine the 50 level. There, but we have just tapped into the 50 level, but we have those highs there. I want to see them cleared, and I would like to see a reaction of that weak inversion fair value gap for lower prices. So generally we are bullish currently. So on the daily, we have this inversion fair value gap that has been created, yeah, the low of this candle is there, and let's see, the yesterday's lows were 08315, and today's low for now is 08302, 315 and 302, meaning it has just dipped into it. In the 4-hour chart, what we can see is you can see these price action, lower prices, and we have this bull candle inside this bull in a lower bearish price leg. So I'll take this to be an order block. So want to see how price reacts off that level, and let me use a thicker line and maybe use another color, pinkish, yeah, deep pink, yeah, to be that's my order block. So I want to see how price will retrace lower, to see how price will act on that level. And my buyers, I'm bearish. I would like to see prices retrace to a 50 fib level of this bullish price leg. Yeah, I'd like to see price retrace below this level. Below that level, this is the, let me label it as 50 fib. Yeah, so, and then clear these, yeah. So dropping lower to the 1-hour chart, what can we see? Where is the Asian from 8 to 12? Asian high, they are here. What can we see here? We have this market structure shift, and also you can see how a bearish price deck is in play. You can see we call it market sell model, whereby lows are being cleared with lower highs, these high is lower than this high is lower than this, and this low is lower, this low is lower than the previous low. So we can see this play, but with relatively equal lows here. Let's wait and see how price will act. So into the 15-minute chart, I want to label the Asian high. We can also see these clean highs here. That's buy side liquidity. Use blue. We have this buy side. Make it blue. Also center, and also make it 10. So we have that clean buy side liquidity paired with the Asian. I guess this the Asian high till 12 a.m. around here, the Asian lows. Yeah, there, this is the Asian range. So what I want to see today is this buy side cleared, also to clear the buy side liquidity. Okay, I want to this buy side liquidity, then I'll drop lower to higher time frames to see, because this, remember, this is the 4-hour order block. Okay, this is the 4-hour order block. I want to see the reaction around this area order block. This let me put the right, top right with 4-hour order block there. Yeah, that's nice. So I want to see that clear of that liquidity being cleared. Then during the New York around 7 a.m. look for confluences to go lower. So let's read by the what has happened during the London. We can see these are the Asian lows here. Price retraced higher, and at around remember the London starts at 2 a.m. so this is the London here. We can see price had rallied, then retraced lower into this fair value gap over here and tapped into this order block, but closed above. You can see this candle, sorry for that, then rallied higher. We had this high here. I don't know whether the high is around 08398. This candle closed at the close 396 and 398. It has not closed higher. So at around 130, this candle, we had this down close candle respecting this order block here, this 15 order block. They didn't close below the order block. I guess around the constant encroachment of this 5-minute order block. So here so you can see they close below the constant encroachment. Sometimes it happens. So yeah, it reacted off that range. It rallied higher you can see this high here was this candle closed above this high, so to some this market structure shift, and also it closed above these close of these candles. You see how they have closed in line there, closed, so confirming a market structure shift. Then we had this candle here that left a fair value gap, then it was tapped into, then you can see the market rallied higher, and want to see it back that buy side liquidity. So London was clean today, go clear this buy side liquidity, then during the New York we can be anticipating to see lower prices. But yeah, so that's my how I'll be gravitating my trading today. So next I'll be going to update my morning plan on my journal. So thank you guys, asanteni sana for being here. It's been 35 minutes. Thank you for watching this video. Please hit that like button, smash the notification bell, subscribe. So guys, until next time, I'll be here in the evening to do a Thursday review. This is a Wednesday review, so see you in the evening guys. Thank you so much for being here. Love you so much, nawapenda sana. Until next time guys, be safe. Kwaherini.